Welcome back. Keeping it with earnings, DB Corp came out with their first quarter earnings where profits are higher by about 4% on a year-on-year basis. Their top line has grown by a little less than 10% on a year-on-year basis. We spoke with Mr. Pawan Agarwal, Deputy Managing Director at DB Corp, to find out more about the earnings, and we began by asking him to describe the performance in the first quarter because net profits and revenues moved up but operating margins came down slightly. So we wanted to understand what put pressures on the margins.
Last year, the first quarter, this year the first quarter witnessed elections, and therefore the code of conduct made the government revenue degrow by almost 13 crores. And all these sectors, performing sectors like automobile, BFSI, and of course the government revenue have taken a decline compared to last year same quarter. And hence, we had a very strong base last year of about 20.5% growth. So it was a high base, and hence, so I think that first quarter we still did well because the categories like real estate and FMCG, healthcare have done well in the quarter one, which are the performing categories. And the categories which didn't perform had a reason for not performance. So we have, so the 8% growth that we have registered, we still consider that as a good growth compared to the high base of last year.
What's the outlook for EBITDA margins and revenue growth for all of FY15?
See, we don't give guidance, but let me share with you that the monsoon has been late, but has come finally and should be able to recover the shortfall. BFSI is looking well. The real estate as a category is looking well. So these 3-4 factors should contribute to a better advertising growth this year. Then on the other side, on the cost side, the newsprint cost is already 2% down compared to the previous quarter of Q4 of last year. We are hoping that we are seeing trends that the newsprint cost will further soften this year, and there has been a very tight control on the other costs. So on the cost side, we'll be pretty much under control, and on the advertising side, we see a better outlook in the remaining quarters, backed on BFSI, better real estate performance, better government performance as well, because in the quarter one the government didn't perform. Also happy to share with you the losses from the investments that we made last year in Patna as well as Jharkhand and Maharashtra have come down in the last quarter to about 8 crores. We see that in the remaining quarters, these losses will also significantly go down because of their performance.
Right, and now what could you quantify that number for us? What kind of advertising growth are you looking forward to in FY15?
As I said, it's very difficult to predict the remaining 3 quarters, but the company has been performing in a double-digit advertising growth in the past. And the previous quarter, if we did not have the shortfall from the government revenues, we would have, instead of 8%, we would have done at least about 11% advertising growth in the Q1 itself. So I hope the company will maintain its double-digit advertising growth performance in the remaining quarters.
All right, we'll just detour a little bit. Zee Entertainment has come out with its earnings. The stock is down currently 1.5% or so. The total income has come in at 1,086 crores versus what was lower than what the street was expecting. PAT is higher at 211 crores versus 193 crore what the estimate was. The first quarter earnings Zee Entertainment has come out with. We'll go to DB Corp in a little bit, but before that, to analyze the numbers and to get the details, we'll get Pankaj Podar a little later on the show, but before that we'll continue with DB Corp. They had also come out with their first quarter earnings, and they were talking about, the management was talking about their advertising growth, which they are expecting would remain in the double digits going ahead from here on. They also have radio business as well. Let's also ask them about the performance in the radio business.
Radio did about 20.5% top line growth, registered a EBITDA margin of about 35%. Radio continues to maintain its leadership in all the cities that it operates. There's and most of the, or more than 50% of its, rather 60 to 65% of its revenue growth has come from expansion of yields, and only about 25 to 30% from adding extra inventory.
What's the outlook for the radio business for the rest of the year?
Radio, we hope that we will be able to maintain this performance for the remaining quarters, because radio still nascent, still hasn't touched most of the categories. The national advertisers, as if you would have seen our previous performances in radio, majority of our business has been coming from local. As we are growing our penetration in local, we are also getting a lot of national advertisers to come on radio, which we were not getting fully on all the 17 stations. So with that additional revenue, additional inquiries from the national advertisers, we see radio maintaining its performance well.
What are your plans for phase 3 of bidding for radio licenses?
We have decided not to go to metros, and so that remains the core principle of the company and the core philosophy of expanding this business. We will look at the cities which will help us to complete a complete offering of a state like Rajasthan, Gujarat, Madhya Pradesh, Punjab, Haryana, and so on. So the station that will come up for bidding, which is typically C and D cities, not the A and B categories anymore. And we see a huge opportunity to create a big consolidation, a big consortium of radio stations in each state, creating a really good value for money for an advertiser, both local as well as national.
Right, and if you look at your printing and publishing business, the business reported growth of about 7.4% in terms of revenue. Going ahead, what kind of run rate are you expecting?
As I said, last quarter we saw a decline from government, we saw a decline from the auto, especially from the national advertisers, we saw a decline from the BFSI. Hopefully these three sectors should do well, and of course the good monsoon coming up, as well as the government overall sentiment should help to push the other categories of real estate and education also better in the coming quarters. So we are hopeful. We are still telling our teams to go to the advertisers, explain them that the market sentiment has to be improved by advertising more in the newspapers and the media.
Right, and we've also seen that your internet business has reported somewhere around 36.2% sequential growth. So going ahead from here on, will that become your focus area?
We have launched in the last 6 months 3 new properties in digital. We've launched a Bollywood site called BollywoodBhaskar.com, a financial site MoneyBhaskar.com, as well as a digital presence in UP. There is a consolidation going on there to get more readers from our existing markets and other markets for Hindi as well as Gujarati for all possible domains of content. With that in mind, our focus is right now on building the unique visitor base. Revenues it's a very small base right now, so the growth that we have seen in the previous quarter is something which which anyways is on a very small base.
All right, so there you heard the management of DB Corp talking about their first quarter earnings. Now let's cut across to a press conference. A Malaysian airliner which was shot in